Good afternoon, everybody. You can shout good afternoon. It's good to see you in the audience, everyone. And what a pleasure it is for me to again add some reality issues to your cruise. This is the third of the formal presentations that I'm going to be doing. I think it's fair to say that the balance of the ports don't really make it conducive to do a more another sort of Q&A session. So if any of you want to have a discussion, we can always do it over dinner or a drink or coffee or whatever the case is over the next few days or nights. But I won't be doing a separate Q&A. We can just discuss this informally since we have a quality group here this afternoon, and since you are the guys who will get that certificate at the end of the cruise. So I'm delighted. Thank you for attending. Now, in this third and final presentation, what I thought I would do is we'd go around the world again, I suppose. We have touched on a number of global issues, global risk issues in the course of the first two talks. And what I'd like to do now is talk about sort of broader change that's occurring in the world, again, largely from an economic and political base as well. Change that is impacting a number of countries, the rise of certain economic powers in the world. Do they have legs? Do they have longevity into the future? These are all issues we can discuss, and no doubt you've all got your own opinion. So we'll discuss that in this particular talk, and I hope that you'll find it interesting. I hate to peddle my own wares, I must tell you, unlike some others. So I just highlight to you that a book that I have had written and published called Tracking the Future. The book has global content to it, along with some content about my home country, and it is available on Amazon for those of you interested to take a look at that. And I think you can virtually, I think on Amazon, you can virtually have a look at most of it for free, I think, the way they offer it. But it is available online. I just thought again, because I like to do this generally with audiences, is to just offer you some of the latest economic data that one can find on one or two pertinent issues to what we've been discussing. And it is worth having a look quickly to see some of the revised growth forecasts for the world over the course of the next 2 years or so. Now, I deal with a lot of economists. I'm not an economist. I deal with a lot of economists, and economists always tend to talk up the next set of results. It's always, you know, the next year is going to be better, and the next year is going to be even better. And sometimes it doesn't always come to pass like that, I must tell you. But just quickly, just to have a look to see some of the more interesting trends in terms of global growth going forward. The world's growth, generally speaking, is lackluster. Global growth is lackluster. The only word I can think of is lackluster. It's not particularly exciting. It's not in negative territory, but it's not particularly exciting, and I'll come back to that in a moment. The advanced economies of this world are barely growing at about 2% per annum. The US is going to grow this year at about 2.5%, not bad. The Euro area this year, well, at about 1.5%, not too bad, but nothing exceptional. Japan is pretty stagnant, and in fact, the future projections for Japan are not particularly rosy. My part of the world, in Africa and other parts of the developing or emerging economies, still growing quite nicely. And there again, you can see the projections for this year, the emerging economies to grow at about 4% this year. That's nearly double. In fact, it is double that of the advanced economies. So for all of the projections about the developing world and how they would be doing, there is still better growth, statistically anyway, coming out of the developing world. But as we will see later on in this talk, all is not what it might seem. China's growth this year will be about 6.5%. India, nicely positioned as the star performer, 7.5%. And of course, the laggards really, and I'll come back to these, Brazil at an astonishingly poor minus 3.8% GDP growth for this year. I mean, that is a pretty miserable projection for Brazil, expected to come back to at least a zero or flat growth by 2017. But I think there's a fair way to go in terms of the jury is out, as the saying goes, as to whether Brazil, in fact, will pull itself out in the next 12 months or so. Russia's economy also, Russia's economy also a little bit better than last year's dismal minus 3.7%. This year only minus 1.8% in Russia. And of course, for us down in the sub-Saharan African part of the world, our growth ticking along at about 3%, and my home country ticking along at about a 0.5 or 0.6%. And I will mention just something very briefly about my home country, because after all, that's where I live and work, and that's where I obviously have the greatest emotional attachment. So I think you get the idea that there is a distinct, what one could call uninspiring level of growth across the world. Some of the star performers are not star performers anymore, and there are some surprises, I suppose, that are still performing relatively well. Some of the concern that we've seen just in the course of the last few days and some of the new data coming out has been around productivity levels. Worker productivity levels. These are graphs that indicate the change in what we call GDP per hour worked. In other words, the productivity level of workers, of labor. It's quite difficult to measure productivity, but we have a look at the graphs. You can just see productivity, US productivity growth is down, and down quite dramatically off better results in the early 2000s. You can just see US workers not being that productive. There are a number of issues as to why workers are not being productive. It's not just a US function of the global economy. UK productivity is also relatively uninspiring. EU productivity also relatively dull. And even for our friends in China, Chinese productivity levels also down. So, you could ask you, well, why is it like this? And there could be a various number of reasons. The big two reasons for me is that in many companies and factories across the world, these companies and factories are still not using technology or the very latest technology to enable workers to be more productive. And I think that utilization of technology is running behind the curve. Companies perhaps don't want to spend. Some do, but some don't. I was quite interested to see a news report last night on the BBC, which is carried here on the ship, which related to the management of the US nuclear arsenal in the United States, still largely being run off 1970s IBM computers, and still being run, I might add, off those old floppy disks. Any of you remember floppy disks? Well, they still manage the nuclear program in effect from some of those computers. Quite remarkable, and I suspect it wasn't a joke report. It wasn't an April Fool's Day report, as the BBC reporter pointed out. Still, these low levels of productivity also, I think, represent a lackluster demand in the world for goods and services. Overall, what we can see, and that's why I like to take those charts and we cross-reference them against another chart just to show you that there is synergy between all of these various economic indicators, that trade in the world, world trade volumes have been very, very low. The value of goods that crossed international borders last year fell in US dollar terms, and that's the first fall since 2009, which was just in that recovery period post-07 and post-08. So I think you get the idea that there's an uninspiring demand for goods and services, and that also has a knock-on effect, of course, in perhaps delaying investment in factories across the world and delaying investment also in new technologies across the world. And that is reflected in this lackluster global growth that we are seeing. So those are just some of the new charts that have become available in the last week or so, in the last few days, and I just thought it's worth making the point. Now, all said and done, I don't want to be the harbinger of doom. I still think that we're looking at substantial change in the world. And this change, of course, is both political and it is economic. One of the great predictors of change, I suppose, was this man from Goldman Sachs, Jim O'Neill, who back in 2001 coined that term, the BRIC group of countries. The BRIC, Brazil, Russia, India, and China. A rather nice acronym that rolled off the tongue quite easily. And of course, for those countries, they themselves gained substantial public relations benefit from being identified as a new club in the world that was set to ignite the global economy, countries that would be the fastest growing emerging market countries in the world. It was a club in which those countries grew into, and it was a club in which slowly but surely started to exert some political influence across the world as well. The issue is quite important because for the first time, we had the biggest population centers on Earth, certainly the Chinese and the Indians. We had the biggest land mass on Earth, added to that, the Russians. And of course, we had the later addition of one of the world's most mineral-rich countries, South Africa, added on to that. And in the end, all of these countries together all had a strength, a global strength, to set them apart from most other countries across the world. Ultimately, of course, this was all about expanding populations. It was all about land mass. It was all about geopolitical influence that all of these countries could exert in their own hemispheres or in their own neighborhoods. The BRICS group of countries, as it became known, once South Africa was included, became a fairly fashionable term. For those of you living outside of the BRICS group of countries, well, did you really care? And frankly, probably not. It was more of an important PR boost to the citizens of those countries identified as BRICS. And there, of course, is the shot of the 5 BRICS leaders at the time, all meeting together. Now, these leaders have met extensively on an annual basis in the course of the last 5, 6, or 7 years or so. And there has been a move afoot amongst these leaders, some of them, of course, in deep trouble now. And I look at the 2 right in the middle, my own president there, and, of course, the Brazilian there. But even Mr. Putin, we could make all sorts of issues about Mr. Putin. But still, the BRICS group of countries did not only accept the fact that Jim O'Neill had singled them out as great growth options into the future, but they also slowly started to shed the Goldman Sachs categorization and develop a dynamic of their own, a dynamic in which they have attempted, all of these countries together, they have attempted to set themselves as an alternative power source in the world to the Western world, to the United States, what one would call to the Washington consensus, to use a very loaded term. And there's one thing in common amongst most of these leaders, or all of these leaders here I have up on the stage. It is a suspicion for the Washington consensus. So the club that was originally used as an investment tool by Jim O'Neill became, in fact, a club with its own political dynamic to set itself apart from the West. This is a cartoon depicting the 4 BRICS countries, the Brazil, Russia, India, and China, and the addition of my home country, South Africa, there, the little president of South Africa added at the bottom, largely because South Africa was regarded as the poor relation, I might add, of these 4 big powers, the briquette, as this cartoonist depicted. I kind of like this cartoon because I think it did allow South Africa to punch above her weight, given her invitation to join this club of nations back in 2010. Ultimately, the BRICS group really was there to identify the largest rapidly developing economies which will, by the year 2050, eclipse most of the wealthiest countries of the world. That was the idea. That was the descriptive term. And if you have a look at all of the great statistics, when you put Brazil, China, India, Russia all together, 42% of the world's population, 26% of the world's land territory, a quarter of the world's GDP, all coming from these 4 or 5 major countries across the world. There was a feeling back in 2008, 2009, 2010, especially after the global financial crunch, that the BRICS would be the future of the world. And in fact, at that stage, in the 2009-10 period, 5, 6, 7 years ago, the BRICS countries were outrunning the West. They were doing exactly what Jim O'Neill had predicted. So things have turned a little more sour, though, for the BRICS countries. For those countries who thought they would be the next best thing, the next best flavor out there in terms of for investments, well, it's been a rough ride. China's economy, as we've spoken about, has, of course, ducked and dived. It's ebbed and flowed. Chinese exports have now dropped by the most since 2009. The economy is off the boil. China's industrial production now, for the first time, really on a downward trajectory, although I think there's some signs of life perhaps going into the next year and the year after. So China won't be down all the time, but it's certainly taken a knock. The Chinese government have put in plenty of fiscal stimulus into that particular economy. They're pumping money into it, and that's having an effect on boosting, of course, demand and boosting production as well. And I think many of you have seen the wars now about the production of Chinese steel and how that's affected steel industries across the world. Still, the Chinese economy off the boil. It's going to come back to some degree, but it does represent a degree of hardship for the anchor of the BRICS countries, which clearly was China, given its economic growth and given its high population. The Chinese economy has seen a dent in its manufacturing as a share of its GDP, but as I always say, there's always opportunity amidst some of the downturns, the services sector in China rising quite nicely as opposed to this decline or dip in the manufacturing share of GDP. Still, and, you know, it would be interesting if we had 2 or 3 economists here on the stage to give a view as to the trend line in Chinese growth going forward. There's all sorts of disputes as to where China will be over the course of the next 10, 15 years or so. From average growth levels of 9 or 10% since 1980, this particular projection from Credit Suisse is the one that has certainly for this decade come, I believe, the closest to getting it right. Now, we could have any number of these projections from any number of investment houses, but I put this one in because I think they've kind of got it right for where they see the Chinese economy for this decade at about 7.5%. But what's significant for this projection is they project a significant drop in Chinese GDP for the 2020-2030 period, down to about half that of what China currently enjoys. Now, look, these are projections. You know, we can all assess this over the course of time because we will live long enough, as I keep on saying, thanks to medical advancements in science and technology. But still, I think you get the idea that the BRICS countries that had relied upon China as the anchor, well, that Chinese anchor is looking just a little bit more shaky today. For Russia, for Brazil, for South Africa, 3 economies, 3 participants in the BRICS that largely are built around their commodity base, the end of the most recent commodity super cycle, the end and the decline in commodity prices has meant that 3 out of those 5 BRICS countries are feeling the pinch, to put it mildly. This commodity cycle, or the downswing in this commodity cycle, could be a fairly lengthy affair. And this, of course, could affect these economies negatively for some time to come. Ultimately, countries that rely upon commodity exports very often just do that. They rely upon their commodity exports. They fail largely in good times, when commodities are high, to diversify their economies sufficiently. And you could argue certainly about South Africa, that's the case. Brazil perhaps to a lesser extent, but it's heavily reliant upon commodities. And Russia, I would argue also, heavily reliant upon commodities. The manufacturing sector in Russia, South Africa, certainly not as strong as it should be. So it's fairly obvious, therefore, when we look at the world and we look at where these BRICS countries should be, that suddenly a vulnerability has crept into the Russias, Brazils, and South Africas of this world. And this is an interesting chart because it just shows you the percentage of the commodity exports of these countries as a percentage of their total merchandise exports. So Russia, over 80% of Russia's exports are commodity driven. Over 80%. Brazil, over 60%. And in my country, well over 50%. When commodities tank, as you've seen, so in a sense do those economies. Of course, the common thread between South Africa, Brazil, and Russia is that it's not only commodities playing a role in the tanking of these economies, it's also political concerns and instability going forward. And each of these countries have a degree of that. I would argue particularly Brazil and certainly South Africa emerging as well. You could argue about Russia that way. Russia, of course, faces two very, very big macro challenges. Firstly, of course, in energy production, in energy prices. We know Russia's reliance upon oil and on other forms of energy. As energy prices wax and wane, Russia feels the heat. But I can tell you also one of Russia's main problems is a depletion of population. And again, from a demographic point of view, which I like to look at in countries across the world, again, Russia, one of the fastest aging populations on the planet. And if you happen to look at some interesting maps as to see how Russia will be positioned in the next 50 years, it will have a population that will shrink and shrink quite substantially. So the medium to longer term effects of both low oil and commodity prices and population depletion going to affect Russia in the medium to longer term. For Brazil, of course, I think you've all seen the news about the effects of corruption and the commodity slump on the leadership of Dilma Rousseff. Brazil today is in deep trouble. It has to be rescued simply because it is a remarkable economy. It's brought tens of thousands, if not millions of people out of abject poverty successfully under the Lula da Silva administration of about a decade ago. Lula da Silva himself, under some degree of suspicion now. Everybody seems to be under suspicion in Brazil, but I can say the same thing about my home country for that matter. But still, Brazil, again, as part of the BRICS countries, great economy, great promise, under severe strain for all of these reasons, particularly that Petrobras scandal and related scandals as well. And again, the graphs just go south. Economic activity, which is the sort of light blue graph, just looking pretty grim. Well, that's all you need to see on this graph, is a southward trend in terms of economic activity in that very, very lovely country. So look how things change. And what I try to look at whenever I do talks is just to give an indication of how once you've got ready for one mindset, you will be shocked by substantial change that will occur. You cannot rest. For those of you in the investment sector, you know that only too well. For those of you in the business sector, you know that only too well. When emerging markets were peaking in terms of their contribution to global growth, and the developing markets were tanking, look to see how that intersection, how those lines have just closed. And now we see the developing markets contributing perhaps more and substantially more to global growth than emerging markets. A complete reversal of fortune when it comes to the contribution of these two important markets in the world. Of course, it's not just all about India and China. There's some great growth potential coming out of other emerging markets in the world. I always like Indonesia. Mexico is showing really good signs, I think, of growth going forward. Those are perhaps the two stars, at least, to watch. And South Korea ticking along at relatively always at a relatively good level as well. So, what does it all say? Does it really mean that the days of the emerging markets are taking somewhat of a back seat? Well, for the moment they are, but if you look at this cumulative growth that's come out of China and India, and if you look to see for how long China is projected until 2020, to grow on average, let us say, at just over 5%, which is a reasonable projection given all of the sources that I've looked at. So for a 20-year period, China will be growing at about 5%. And we could similarly say that for India. India about a decade later than China in terms of reaching these levels of growth, but assuming no black swan incidents or terrible unforeseen problems, a substantial growth at 5% expected for 2 decades. You can just see here by comparison, the US grew at just over 2% per annum between 1900 and 1950. So for 50 years, the US grew at just over 2%. And the UK, back in the Industrial Revolution period, or just before, grew at very low levels for extended periods of time. So you've got 1.3 billion people, 1.3 billion people growing at 5% per annum. It certainly, in my mind, still reinforces my view that these will be the economic powerhouses into the future. There are all sorts of interesting statistics and fun issues that come out of when we look at what China has achieved. China today exports in a single day more than the country exported in all of 1978. Still astonishing statistics coming out of that country. I always like this particular slide. It just shows the discipline of the Chinese workforce lining up at the start of the working day. I sometimes like to show it to our state workers or union-based audiences back in South Africa, just to show how disciplined the workforce can be. And it's not just about workers, of course, but China is shifting. And it's not just cheap labor anymore. We know that shift is probably already taking place. Chinese labor not so cheap anymore. It's all going to be about innovation. And I actually think we are going to move into an era in which Chinese innovation begins now to be real. They are no longer just copying innovation. They, I think, are now going to be preeminent innovators across the world. And there's enough evidence to suggest, in terms of the amount of scientists and engineers graduating per year, there's enough evidence to show the great strides being done in many, many aspects of the global economy. And I think that's where the interesting future is going to be. We can't quite factor these into all of the economic models, but I think there's going to be great excitement in terms of Chinese innovation. From an Indian perspective, despite the fact that we talk about the BRICS countries being a little on the off for the moment, there are great demographic advantages to India. It's the world's youngest country. 50% of 1.2 billion people are under the age of 25. It's an astonishing figure, by the way, when you think about it. Just think about it, because 50% under the age of 25 means that there are now about 500 million, 500 million teenagers in India alone. 500 million teenagers. For those of you that have grown up, or if you've had one or two teenagers at home, you know how difficult it is to handle one or two teenagers. Imagine 500 million teenagers out there. But what a market for goods and services appealing to that teen market. And I particularly like India going forward, notwithstanding issues of graft and corruption and cronyism that applies in that society as well. India has been kick-started, I suppose, into this next period of growth by virtue of a relatively new leader, Modi. There is an attempt to liberalize labor. Not easy to liberalize labor restrictions and regulations. Since I spoke about French labor unrest 2-3 days ago here on the ship, you've seen additional problems occur when countries try to liberalize their labor relations regime. And France today is racked and gripped in a series of union protests. So the jury is out as to whether Mr. Modi is going to get it right to liberalize and to simplify labor regulation across India. But certainly there's a PR spin for India like never before. Sometimes one could be a bit skeptical about PR spins, I must tell you, but still, the country, and under Modi, there is a distinct and concerted effort to incentivize foreign investment and, of course, to try and improve and make more efficient the manufacturing sector across that amazing country. I've been to India many number of times. I'm sure many of you here as well. And again, I like it into the future. Again, for all of the negativity that one can talk about these emerging markets and the fact that they've taken a bit of a backseat for the moment, the more medium and longer term projections as to who will be the consuming class, where the consumers of the future going to be, because a lot of my clients are in the consumer, the fast-moving consumer goods section. They want to know where the clients are going to be. It's still largely going to be, to me, in future, a play to the rising quantity of Chinese consumers, the rising quantity of Indian consumers, mass-based consumer opportunities, of course, requiring particularly unique types of treatment. When you provide a service for an Indian consumer, when you provide a product for an African consumer, everything has to be localized in terms of appealing to the local demands, the local culture. The packaging has to be of a particular type when you are looking to sell a product for the African market, I must tell you. And I've got so many clients, it's all very interesting. You can't just take a detergent that sells in a certain package in one country and simply think that you can sell that detergent in the same package in another country. The quantities need to change, the packaging needs to change very often, and all of these factors make doing business across the developing world very interesting, but also extremely challenging. Again, we look at the figures and we use the available research house figures just to see where those consumers of the future are going to be, and ultimately it is going to be about emerging markets. So despite the fact that the graphs don't look too good today, despite the fact that emerging market growth is off the boil, still, in terms of the value of world consumption figures by 2050, this is where I believe the action is going to be, and I'll come back to that a little bit later. We've spoken about the BRICS countries. Of course, those cynics amongst us who might feel that, well, Brazil, Russia, South Africa, good heavens, they're off the boil. Let's take them out of the equation. It's perhaps just the India-China play into the future. As a result of that, Mr. O'Neill, who coined the term BRICS, himself has expressed disappointment with the cumulative growth of the BRICS countries, and he sat in his office in New York and he came up with another acronym, and that acronym he termed the MIST group of countries, the next 4 countries that might be a little more attractive even than the BRICS over time: Mexico, Indonesia, South Korea, and Turkey. Don't you love all these acronyms that we all come up with? But I think it indicates too that there's more to life than just the BRICS countries. For China though, China's mutation, as I've spoken about in terms of its economy, China is also mutating in terms of her global role and where she is, I think, positioning herself financially. The Bank of China is going to maintain a very stable Chinese currency, and that will increase its ability to qualify the currency as an internationally acceptable unit of account and store of value. And it's a serious issue on the Chinese agenda to pump that Chinese currency globally as far as possible. And central banks, be they in other developing countries like Nigeria and Saudi Arabia, have also intentions to diversify part of their reserves into the Chinese currency, confirming its growing reputation in the world of reserve currency. So there is a substantial shift, the Chinese currency gaining traction across the world. China, too, is involved in some very large financing schemes across the world, and this keeps its hand in terms of being a global, if not a regional player, a global player as well. Providing support, financial support to Asian infrastructure is becoming an important part of Chinese foreign policy. And again, China is building a network of relations with Southeast Asian countries with a view to financing their infrastructure needs into the future. The Silk Road Infrastructure Fund, rather nice name I might add for somebody whose surname is Silk, the Silk Road Infrastructure Fund is getting huge amounts of cash from the Chinese government, and this builds relationships between China and, of course, the Thailands of this world, the Cambodias of this world, in terms of infrastructure going forward. What I think is interesting about the sort of changes and the shifts we've seen in the world, particularly what the BRICS countries have tried to do, is that they've tried to provide an alternative to some of the Western financial institutions that have been part and parcel of our world since the Bretton Woods Conference at the end of the Second World War. In particular, the International Monetary Fund and the World Bank have been seen by those outside of the West as institutions largely supportive of Western interests and largely anti the developing world. And there is this view across the developing world that if we go cap in hand to the IMF or to the World Bank, they impose on us a set of restrictions, structural adjustment programs. We are beholden unto Western financial institutions when it comes to loans or bailouts. So what have the BRICS themselves tried to do? They have tried, I think, to confront these Western institutions, the IMF and the World Bank, by creating their own institution, the BRICS Development Bank, as it is called now. And this bank has been established, it's been constituted, it has received seed capital from the 5 BRICS countries that are part of the BRICS movement, and this is seen as an alternative to the World Bank. So let us say a small African country needs money for infrastructure development. It doesn't want to go to the World Bank because it fears too much conditionality upon going to the World Bank, there's an alternative. Now, you can go knocking on the door to the BRICS Bank and get that loan. And it's an interesting, I think, diversion or alternative that we've seen in terms of an alternative power source in the world. And this is a feature I think that we watch quite closely. The bank has just been established in the last year, and I think it's taking its first loans and applications now from, in particular, from many African countries across the continent. Let me then move away from the BRICS countries, because I think, the message is it's a bit of a mixed picture. The collective of the BRICS is really not perhaps what it was, but there's no doubt the Chinese have legs, the Indians have legs, and hopefully the other faltering BRICS countries, including my own, will find some of their legs in future. Let me just move quickly to Africa, because it's a continent I think that's quite interesting from a global point of view. Often, referred to as sort of a lost continent. How many of you invest in African stocks, equities, ETFs, frontier funds, you name it, whatever you want to call it? A remarkable continent, by the way, very large, as you can see. You can fit all of these other countries into the African landmass. I always think it's a good map, especially for those of us who are more geographically challenged, by the way. But the United States can fit into Africa quite easily, along with China, along with India, along with most of Europe, and the UK fits quite nicely land mass into the island of Madagascar. Always good just to get an idea, a perspective of the size of Africa. Now, Africa from an investment point of view has been quite healthy in the last 15 years. Great rising graphs. I could show you a zillion rising graphs of GDP growth rates across the African continent, starting from a very low base, of course, but still, we've seen growth in Africa, many African countries, 7, 8, 9, 10, 11, 12% per annum for any number of years. This year, it's a little different. Most of the hotshot economies across Africa are taking strain, again, as a result of weak oil prices and weak commodity prices. I mean, some great economies across Africa. Angola, a war-torn country, full of landmines. Now one of the hotshot economies in Africa, but suffering because it's simply far too reliant upon oil. The same can be said for Nigeria. So most of the African countries have taken a substantial knock in terms of their GDP growth over this year, and again for the same old reason that they are over-reliant on oil. And this adds a degree of instability to this great rising Africa story for us on the African continent. It's all about Arise Africa, the Africa Renaissance. But it is a tougher year this year than it has been before. And as, of course, commodities slump, and if your major export earner is in the commodity sector, so goes your currency as well. And African currencies have borne the brunt of devaluation in the last year. Most of them are certainly not where they were. They've come back a little bit in the last few months as the prices of precious metals have risen again in tandem with the price of oil. But you can't underestimate the effect of low currencies and currency devaluation on harming the economies of these countries. And the big problem for so many African countries is that they've taken out big debts. They've floated bonds on the global capital market, repayable in US dollars. So when your own currency tanks and you've still got to repay your investors in US dollars, you can be in a spot of bother. And there are many African countries who have got themselves into high levels of debt. Africa, too, does not trade sufficiently with each other. Africans very often tend to trade with Europe, other parts of the world. We don't have great intra-African trade. And one of the, I suppose, bugbears for all of us is that is something that needs to be upped. We need to trade with ourselves, just like the EU trades with itself. Although, let me talk not about the EU again, otherwise I'll get into more trouble as I did in that first particular talk. One of Africa's big problems, other than all the other issues I've spoken about, is that they're simply not globally, countries in Africa are not regarded as being globally competitive. Whether it's corruption, whether it's logistics in particular, whether it's red tape, whether it's border controls, cost structures, a myriad of different issues make Africa less competitive than so many other regions of the world, although there are slow signs of improvement. And the big problem for the African continent is that despite the fact that it has 12% of global oil reserves, 40% of gold, 80% of chromium and platinum mineral rich, Africa only has barely over 1% of all global manufacturing. So you can just get an idea that the continent doesn't manufacture, It relies upon what it extracts from the ground. Are there some good signs coming out of Africa? Yes, there are, and there are some pretty good countries out there that are starting to show important signs of diversifying their economy. I've just come back from a very interesting trip to Ethiopia. I mean, Ethiopia, for those of you that haven't been to Ethiopia, what are you associated with? Possibly famine. Possibly as a basket case, I might add, in the last 10 or 20 years. Yet today, Ethiopia is the fastest growing economy, more or less, on the African continent, and it is now ranked in the top 10 of destinations, sourcing, what we call sourcing destinations over the next 5 years or so. Countries in which manufacturing is appealing to foreign investors, Ethiopia. And I like it going forward. Fascinating country, by the way. It's got its own political issues, but that's the topic of another talk altogether. From an economic point of view, it looks pretty good. My country in South Africa, again, important country on the African continent. And I don't want to say too much about my country. I'll just quote our finance minister in South Africa, who has spoken recently about the fact that we are in a crisis in South Africa. We have a broad-based economic crisis, and we also have linked to that, perhaps one could also call political question marks into the future surrounding the political longevity of our President Jacob Zuma. Our economy has stagnated. Our growth rate is down to just over 0.5%, really not good enough. And the big problem for South Africa, as it is for many other countries, is very high unemployment. Our official unemployment rate in South Africa today is 26.7% unemployment, 26.7%. That's the official rate. That excludes all those who've given up looking for work. That's another 10% to which you've got to add on to that, the discouraged work seekers, as we call them. So our economy has stagnated largely, and we are being punished by those international rating agencies, or they are threatening to punish us and downgrade us as a result of a declining economy. Standard & Poor's, Moody's, Fitch, all of these rating agencies have been knocking at our door, warning us that we are potentially going to be downgraded into what we call speculative grade status or junk status, which of course will make any borrowings that we might have on global financial markets even more costly. So this is of great concern to us in South Africa as I speak, and it's had an effect also on the currency and on morale in general. But despite all of that, and this is why I always say there's always opportunity even in generally bad economic times. Despite all of that, what we have seen in South Africa, and we see this now as a trend across Africa, is a willingness on the part of global, particularly retail sector players, to enter the developing world like never before, to enter South Africa with 35% unemployment, and to invest quite heavily. Zara here from Spain, Topshop from the UK. We've had a whole host of Sweden's H&M, all of these big retailers now coming into South Africa, seeing an emerging middle class as being fairly buoyant despite the pretty grim overall economic stats that we have. In the last month or so, Starbucks have just launched in South Africa. We've never had any Starbucks before, and yet here is a chain who believes that premium coffee is underserved in South Africa and is about to, in fact, put in nearly 200 branches of Starbucks across the country. Fascinating in terms of such poor economic growth and economic performance. 3 years ago, the Whopper arrived in South Africa. Burger King arrived. Now, I dare say for an audience here, you may not get that excited about Burger King unless you are an executive with Burger King sitting here in the audience, but this is a company on a global expansion trail. This is a company looking to diversify and sell their product well outside of the more stagnant US market. And they see, particularly Africa, as a destination for a consumer-driven demand for the Whopper burger. And it's remarkable because they got it right. They came into South Africa, and I can tell you those are the lines of people that were lining up in Cape Town, where I live, just to get their hands on a Whopper. And this wasn't just on day one of the opening of the first Burger King in South Africa. These people and others lined up for weeks and months thereafter to try and get their hands on a Whopper. I mean, the novelty seems to be over, but still, this is a remarkable launch for a company that had reached a level of maturity in the Western world, yet the opportunities, even in difficult emerging markets, still made it attractive for them. So why do these companies like Africa? Because the fundamentals across the continent are still interesting. Those huge population gains that I've spoken about before for the African continent for the next 50, 60 years are very strong. That's the population growth in Africa. It will overtake Asia, by the way, in terms of population numbers just after 2100. Africans are more educated than ever before. There's a social upward mobility amongst Africans. More Africans now in school. And that's an impressive performance for many African countries. Poverty levels across Africa have been declining, again off a low base, but still, you've seen improvement. And talking about poverty, you've only got to go quickly to Lagos in Nigeria, and I'll take you quickly into the new Porsche showroom. There's the Porsche showroom in Lagos in Nigeria. It was one of the most successful launches anywhere in the developing world, by the way. I was told by Porsche. I'm always amazed, though, because if you buy a Porsche vehicle in Lagos, the question is, where do you drive that Porsche vehicle? That's the average road, I must tell you. So where you drive it, maybe you just park it in your home and you admire it and you polish it. But that's one of the anecdotes and one of the interesting anecdotes of a pent-up demand for expensive retail items in parts of the continent. Still, problems exist, particularly in infrastructure. And there's great opportunity across the African continent for companies, particularly in the engineering, architectural fields, in the provision of sanitation and water, to really muscle in and to assist Africa's developing cities in particular overcome this kind of decayed mess that prevents growth. So finally, two final slides just to round off this presentation, which I suppose summarizes everything. And as a typical analyst, by the end of you have 3 talks that I think most of you have actually been to, and I'm very grateful you've been to the 3 talks, can one make any generalized comments? Well, probably not. Because when we look at all of these regions of the world, what we do see is a very fragmented business cycle that operates across the world. It's very fragmented. There's not much we can generalize about in terms of growth, other than to say that the Western world is enjoying, in inverted commas, very stagnant growth going forward. The US there on this particular chart, this chart, by the way, comes from Macquarie Research. It's a chart that I like because it does show that the East Asian economies have done relatively well. They've been on a fairly nice upward path. They might be a little bit off the boil, but not too bad. The same could be said for much of emerging Europe or Central Europe, and I explained to you in the first lecture of how the Polands and the Latvias all have had fairly high growth rates, much higher than other parts of Europe. So again, emerging Europe, some of the Far East looking pretty good. For the US, again, a recovery on the basis of very, very low growth after the 07-08 period. And again, I think you can see on this particular line here, you can see important, one wouldn't call it stagnation, but important growth for China and India, perhaps moving on the up again, back on the upward path. So again, at 6.5% China, 7.5% India, looking relatively good on an upward trajectory. For the EU and for the UK, lackluster and lackluster and uninspiring, and for our friends in Japan, perhaps a little bit worrying for our Australian friends here in the audience also. Again, very similar, relatively positive growth going forward and perhaps plateauing at lower levels, but moving on a marginally upward trend. So look, everyone is at, there you go, how's that for brilliant analysis, my friends? Everyone on a slightly different period or pattern of growth going forward. Finally, for all said and done, there's one big aspect that I haven't mentioned. It's an aspect that always concerns me about the world, and it's an aspect that reflects on change in the world as well. And I'll just show you a cartoon to illustrate what I mean by this right at the end of this talk, because it opens up a whole fresh area of debate. And I may as well, at the end of my talk, just open up a debate and you can think about this particular cartoon. It's a cartoon set in the United States in the 1950s. And in the 1950s, a father might have sat down with his kid for a meal, and the father would have threatened his kid, "Son, be sure to finish your dinner. There are children starving in China and India," in the 1950s, starving in China and India. Now, things have changed just a little bit, and the cartoon really does depict one of the most important changes, I think, in the world. Today, the father may sit down with his son, and he will say this to his son: "Son, be sure to finish your homework. Homework, not dinner, homework. There are children studying in China and India, studying. From starving, which is perhaps a bit extreme, but still, from starving in the developing world to an acknowledgement that people in the developing world are studying. They're being trained. They're receiving a relatively good education, or at least a better education than their parents have received, and certainly than their grandparents ever dreamed of receiving. And on the basis of global change going forward and competition going forward and where skills are going to be in the future, and we haven't even spoken about skills, this, I think, is a substantial change. And I like this. I like it, not because it undermines the Western world, but it does indicate that the world is much bigger than just the United States and Western Europe and Japan. The world indeed includes all of these big societies now. And I think we're just on the cusp, for all of the negativity that one perhaps does highlight in some of these talks, we are on the cusp of a remarkable breakout in talent from across the world. And those of you that are involved in global multinationals, and you know when you go look at that talent is increasingly coming from non-Western societies in the world. And that, I suppose, makes me proud, in a sense, to come from a developing part of the world with all its own problems and issues. Thank you so much for attending this particular talk. I really appreciate that you've come out to listen to me, particularly in a port day. And again, over the next few days, stop me if you have any questions or issues. I'll be only too happy to answer the issues. I'm on contactable on LinkedIn if you use that particular social media network, or Facebook or any other ones. And if there are any questions or you want any of the stats or graphs, I'd be very happy to email you any of them over the course of the next few weeks or so. Thank you again for listening to me today.